More than 44 million Americans across the United States are able to afford college because of student loans. Not all student loans are the same, though. Hi, I'm Marla Kane with FEAA, the Pennsylvania Higher Education Assistance Agency. I'm here to help you understand those loans a little bit better. Students are able to borrow what is called the Federal Direct Loan Program. It's available to all students regardless of need. There is an interest rate of 4.45% for the 17-18 year and a 1.066% origination fee. The rates are set every July 1st for the life of that year's loan, and remember that fees are deducted from the disbursement. They're awarded to every eligible undergraduate student. It is in the student's name with no collateral or credit check, but the student must sign a master promissory note and take part in entrance and exit counseling. Available loan amounts increase in subsequent years, and no payment is required while attending school and during the 6-month grace period. Be aware that there are 2 types of the Federal Direct Loan Program based upon the FAFSA. The first being subsidized, meaning the government pays the interest in school and during the grace period, or the student would receive an unsubsidized loan where interest accrues in school and also during that grace period. Please visit studentloans.gov or your school's website to learn more information about these particular loans. Students are able to borrow up to $5,500 as a freshman, $6,500 as a sophomore, and $7,500 as a junior and senior, with a combination of subsidized and unsubsidized loans. Parents are able to borrow under the Federal Direct Plus Loan Program. This is in the parent's name for the student cost. Currently, interest rates are at 7% fixed, with 4.264 fees in origination. The rates, just like students, are reset every July 1st for the life of that year's loan, and remember that fees are deducted from disbursement. A family can borrow up to the cost of attendance, and they must apply each year the loan is taken. There is no debt-to-income test, only a lenient credit check. The principal payment can be deferred while the student is in school, but remember that interest will continue to accrue. If a parent is denied, the student is eligible for an additional $4,000. However, that's going to be in an unsubsidized loan. Please remember you'll also need to complete a FAFSA to determine any additional aid. Another way to borrow could be for private and alternative loans. These are non-federal loans made by a lender, such as a bank, a credit union, a state agency, or even a school. The student will borrow in his or her own name, but they're going to need a creditworthy cosigner. It is based on a credit scoring and debt-to-income ratio. The repayment may be deferred until the education is completed, but be aware, fees, interest rates, loan amounts, and even repayment provisions, they're going to vary by lender and generally are higher than those federal student loan amounts. A cosigner, again, is going to be required, and some loan products have a cosigner release option. Really important to be a conscious consumer. Compare those loans, read the fine print before you make any decision.